Good morning, everybody, and welcome back to Beat the Bell presented by Kane Capital. Glad that you guys are joining us this morning. Apologize for the delayed start. We were having some technical difficulties this morning, but now we are ready to go. Fired up to be back with you guys. Hopefully, you guys are all having an awesome trading week so far. All right, Diamond Trades. What's going on, brother? Good morning.
Alejandro, what's up? Good morning. Excited to get into it. We've got a lot to cover on Fed forecast. Should be a good day.
All right, and Stock Sniper. Good morning to you.
Good morning. We got a spicy Bet the Bell today. Let's get to it.
All right, phenomenal. Let's go straight into Fed forecast. Sal should be joining us any moment now. He was having technical difficulties as well, but for now, Diamond Trades solo manning the ship.
Yeah, somebody's got to carry the boats and the logs, and that'll be me today. That'll be me. So let's start with the economic calendar for the day. Again, like I said on Monday, we really have a pretty light week in terms of economic data. Today we did have building permits and housing starts at 8:30 that are setting the market slightly higher. Tomorrow we're going to have Philly Manufacturing Index and the weekly jobless claims before existing home sales at 10. And then Friday we really don't have much high impact news. So a pretty light week as far as the economic calendar goes, but we do have a lots of news elsewhere in the market that we'll get to a little bit later. Let's first talk about yesterday's trading. So the market has continued to show strength following the breakout on last week's inflation data. So yesterday, the S&P rose 0.7%, with the Dow and NASDAQ adding 1.1 and 0.8% respectively, pushing the NASDAQ up a whopping 37% now year to date, which has just really outperformed so many people's sort of beliefs of where this market could go this year, already at 37% and a little bit over halfway through the year. The bank earnings release yesterday certainly helped out industrial stocks. So the Dow actually had their highest daily chart close since April. And so Bank of America and Morgan Stanley both reported earnings that were solid earnings reports that were ahead of analyst expectations. And, this move that we've gotten so far is ahead of the big tech earnings, starting after the close today with Tesla and Netflix reporting, followed by Taiwan Semi, which reports on Thursday, and American Express to round out the week on Friday. But let's dive a little bit deeper into the Morgan Stanley Bank of America numbers. So Morgan Stanley and Bank of America were the last GSIBs to report, with the exception of Goldman, which reported this morning. Though Morgan Stanley reported a 13% decline in earnings, led by a 22% year-over-year drop in trading revenue and more or less flat investment banking fees, the numbers still topped Wall Street expectations. Executives at the bank also said that client activity had increased during the quarter. Bank of America reported revenue of $25.2 billion versus estimates of $25 billion, and an EPS of 0.88 per share, beating estimates of 0.85 per share. So the double beat sent the stocks and the sector trading higher throughout the rest of the day, and really sort of buoyed the Dow, which was definitely the outperformer yesterday, up again 1.1%. Even though Bank of America did have that double beat on both the top and bottom lines, it wasn't all good news out of Bank of America. So the bank's total deposits fell about 5% from a year earlier and 2% from the first quarter to 1.88 trillion. Non-interest-bearing deposits fell 24% from a year earlier, while interest-bearing deposits rose about 5%. The bank paid interest of about 1.82% on its interest-bearing deposits, up from 0.11% a year earlier and 1.38% in the first quarter. Depositors seem to be taking advantage of the highest rates that we've seen in this country in well over a decade by pulling funds from non or low interest-bearing accounts and parking them in money market funds, a trend that hasn't been confined to Bank of America. PNC and JP Morgan both reported deposit decreases of about 3%, while Wells Fargo reported a 6% drop in deposits. So that's something to pay attention to in the financial sector, even though financial sector earnings are more or less drawing to a close today with Goldman Sachs that reported this morning. But that'll be it for me. Mena, what do you got?
Coming on to the good earnings now. Banks actually came in pretty good so far, and then coming into the close today, we have Tesla and Netflix, which would be big ones. So after a rocky start to the year, Tesla kind of returned to this feverish rate of sales growth for its EVs. New vehicle deliveries almost doubled in the April through June period for Q2 there to a record high. But analysts are still expecting profit to rise just 3.4% year over year from last year. So we'll see. Enthusiasm for the stock obviously went through the roof really ever since Elon appointed a CEO to Twitter, up about 83% since that move on the stock. And the company is targeting production growth of 31% this year. Elon Musk suggested closer to 50% is possible. So I think really all that's going to come down to is bottom line numbers is what people are watching. Obviously, I think revenue growth is going to be massive, as that's what the company bet on, versus profitability growth when they did the margin cuts. But their analysts predicting $2.3 billion profit, or about 80 cents EPS for quarter two, with revenues of $24.2 billion. So sitting right around a 10% profit share there. We'll see how they report. And then obviously Netflix coming in as well today. We'll see how the numbers go. I think we're looking pretty good here as far as going into big tech based off of the numbers we saw from the banks kind of starting the earnings season.
Yeah, I think earnings season technically started, like early last week, and then technically started late last week with the banks, and now I think it technically starts with the start of big tech earnings this week. And so we'll definitely have to pay attention to those numbers, see how they come out, and what implications that'll have for the rest of the sector. But that'll wrap it up for us here at Fed Forecast. We will pass it back to Alejandro.
All right, thank you, fellas. We're gonna take a couple minutes here to appreciate the system. Now, if we look at the 30-minute chart, as you guys know, we've got the 50 SMA and the 10 SMA. The system gave the buy signal on the 11th of July. Consequently, we've seen a 150-point rally. And as you guys can see, this trend has been extremely strong. We have not broken down below that 50 SMA. And we keep saying the same thing, that bulls are in control as long as we're trading above the 50 SMA on the 1 hour and 30-minute charts. Now, eventually, we will break back down below the 50 SMA in the 30-minute. Eventually, we'll break back down below the 50 SMA in the 1 hour, and we'll get some sort of pullback. But until that happens, all we're doing is riding the trend. And what gets a lot of people in trouble, especially in a market that is in a clear uptrend, whether you're using the system, whether you're using simple technical analysis. We got a giant breakout over the July highs last week. And for that reason, all dips have been bought. And we're now targeting 4,600 in ES. Whether you're looking at, just regular TA, whether you're looking at the system, we can see how strong the trend is. And people get in trouble trying to call the top. And it's very, very important to understand that when you're in a technical bull market, you can get burned trying to call tops. And most importantly, the opportunity cost of trying to short the top can be very, very expensive versus simply just riding the trend and looking for opportunities, in this case, to get long. Something else that I think is very important, and the last thing I'll say here, when ES or SPX does decide to finally pull back, and there will come a time where we'll get multiple straight days of selling of red, and typically that's when the top callers come back out to play. Have those technical breakout levels ready to go. Understand that if we pull back, okay, let's say we sell all the way back down to where we broke out here over the July highs. If we sell all the way back down to that level, that's just a back test of the level, okay? And you're going to see, the bears coming back out to play. Obviously, there's going to be top callers, as I mentioned, but we know that using technical analysis, there's nothing technically bearish until those breakout levels start to fail, and we haven't seen them fail all year long, which is why we have been rallying so hard, and something that's really important to keep in mind. So that's going to do it for the system. It's going to do it for the S&P. Going to go over to StockSniper now for Bet the Bell.
Good morning, guys. We got a pretty cool Bet the Bell, excuse me. Some really interesting questions for you guys, but I'm going to go ahead and start it off with the normal, typical first question. We can ignore these stats right here. I put myself in the bottom just to be very modest. But first question is green or red on the day? I'm going to have to start it off with Diamond today.
I'll go green. I'll go green for today.
That sounds very unconfident.
Yeah, I mean, yeah. I don't really know. Like, the reason I was a little bit less confident is because I don't know. It seems like you could set up like a midweek consolidation, like a midweek pullback into the expansion into the end of the week, sort of awaiting the numbers that we get after the close today. Because I'm trying to think like that's really the only catalyst for the week, or at least the biggest one. So yeah, but I'll go green. I'll go green.
Hondo, what you got?
I'm going green.
Mander, what you got?
Tough one today, isn't it, bruv? I'm gonna take red on the pullback today after yesterday's squeeze to the moon.
Yep, I'm gonna have to agree.
Who told you could do? Who told you could talk like that?
I missed it. That was gonna be my my good morning panel introduction.
Oh my god.
The good morning was gonna be. You think the market's gonna be red today?
No.
Good morning, guys. I think the market's gonna be red today. Yeah, okay. I got red also. Yesterday was a absolute ripper. I think that we could definitely see some kind of pullback, considering the PA we saw yesterday. Next question I got for you guys, and I have to say real quick before I start this one off, called Will SPY touch 455 this week? I believe I asked this question on Discord Live Voice. Mander said, yes, it will touch. Got to give Mander some props here. Mander has been nailing these will this touch this price questions in the last couple of weeks. He is perfect record so far.
Didn't we talk about it on here?
I wasn't sure. I'm not sure if that was on here or if that was the one we talked about later in voice. But either way, you nailed it. So props to you.
Are you keeping track of my record? Because I'm probably undefeated, considering I've said yes to every bullish question the entire year.
Can't say I have, to be honest.
I'm just wondering why my Mander's getting all the hype here. What am I missing?
Mander just called 450 and 455.
2 for 2, I guess.
Okay, whatever. Next one. Will Tesla hit $300 by the end of this week? Now, I chose these words very precisely. Hit $300. Not hold $300. Hit $300. I'm going to have to start this one off with Diamond.
Why do you keep starting with me, bro? I'm gonna go with yes. I mean, trading at 295 in pre earnings today. If the bank earnings have been any, I guess, hint, then the earnings should be good. Yeah. So we're pretty close already. And like the volatility that you get after earnings, like. Unless it goes straight down, unless they report like awful numbers, the volatility alone from the earnings should get us there. So, yeah.
Okay. Mander, what you got?
I'm going to say hit and hold. I think this closes the week over 300 after a pretty good earnings report today.
That's a bold statement again. Next, I got to go with Hondo. What you got? 300?
Yes.
Yeah?
100%.
300 across the board. Yeah, I think it will hit 300 as well. Next question I find pretty interesting, but I don't want you guys to tell me Harry Potter or Lord of the Rings or some fantasy kind of book. I'm talking about productive kind of books. What is your number one recommended book? I'm gonna have to start this one off with Hondo.
All right, so I just finished this one, The Psychology of Money. I think that everybody watching this would really appreciate the book. A lot of what we're taught is, based on numbers. And a lot of the books I read that are number-based, strategy-based, especially when it comes to trading, don't really register as much with me. This particular book, I ripped through it, was hooked the entire time. It really gives you insight as to why you think about money the way you do, how people handle their money based on their backgrounds, things that you can do in order to, view money and investing in a more objective way. Honestly, I wish I had read the book a long, long time ago. Highly recommend.
So we got The Psychology of Money by Hondo. Can we get an author there?
Yeah, Morgan Housel.
Awesome. I'm going to have to go to Diamond next. What's your number one recommended book?
Go to Sal.
Yeah, what's your number one recommended book?
If we're gonna go like
trading, Percy Jackson. No, it is.
I think there's a lot of good ones that deserve honorable mentions, but in the trading space, I think my number one book recommendation so far is going to be Principles by Ray Dalio. Get inside the mind of one of the best money managers to ever walk the face of the earth.
I like that. Hunter or Diamond, are you skipping this one or?
No, let's go. I will go. I'm going to give you two. I'll go volume and price analysis and cooling and reminiscence of a stock operator, Edwin Lefevre. I believe is how you say his name. Lefevre.
That's a good one.
Good old Anna.
I see.
Yeah. Both
Awesome.
quotes.
I'm going to have to give two as well then. And I'm going to have to go with How to Win Friends and Influence People by Dale Carnegie. Very good sales tactic book. And then I'm going to have to go with The Setup by Dan Bilzerian. Another pretty interesting book.
Bilzerian has a book?
He does. It's actually like really pretty good. Pretty good. Next question I got for you guys. This one probably could be pretty funny, but interested to hear what you guys say. What is the worst stock on the market as of today? I'm gonna have to start this one off with Mander.
All right. I was waiting for it to go to Noah. This is a tough one. I think like the one stock I probably wouldn't own right now. It's a toss-up for me between Goldman or Disney. Both are just really getting hammered, absolute laggers in their space. But I'll say Disney right now.
Disney's the worst stock on the market.
Bro, this man just he picks Disney and one of the largest banks on the planet as the worst stocks in the market.
Okay, let's take
what are you talking about?
marijuana at 30 cents. Like that's like not a stock. Like I'm saying, like the worst actual stock on the market right now. You can't just name it 50 cents and say it's like the worst stock out there.
Okay. I could respect it, I guess. Hondo, what you got?
All right, so mine's gonna be basic too. I was talking a lot of crap, but remember last episode that we did on Monday when we asked, would we rather own $1 million in Microsoft for a year or
Nope.
$2 million in AMC?
$500,000 in Microsoft or $1 million in AMC? Must hold for a year.
I think it was the other way around.
No.
But anywho, Microsoft that same day ripped, or maybe it was the next day, it was yesterday, ripped like 4 or 5%, and AMC was down like 2%, while the rest of the market was just ripping. I really can't think of a stock like if somebody was like, you have to hold AMC, like that's just like you're gonna be depressed. Like every day that you look, the stock is down. So I would never want to own that one.
I see. Diamond, what you got?
Honda picked mine. I was gonna say AMC, to be honest.
You just do GME.
Yeah. I mean, I guess I could. Yeah, I'll do GME, but I mean, AMC more specifically, I think it's
horrible.
I mean, AMC is like, I would just hate to. It's like a false hope sort of thing, or like GameStop. I feel like there's like a little bit less hope. You know what I mean? It's like GameStop's kind of dead. Like AMC, like there's still like hope lingering around FinTwit and like these DD threads about, you know, random people who are going to send the stock to like $1 billion, stuff like that. I don't know. I would hate to be involved in something like that.
Okay. I can think of worse stocks than all of the above. And I'm just going to name a couple right away. But
Please.
I'm surprised that, Diamond, I'm really surprised that you didn't say Peloton, right? Absolutely.
I mean, bro, at least Peloton has like a
I rode a Peloton Saturday.
I think Peloton,
Peloton's
the
sick.
reason, Snipes, I think Peloton, the reason that we hated Peloton back in the day was like, it was really a sign of like sort of the speculative bubble that we were trading in. And like, you know, it was more like a bike with an iPad stapled to it and got like several $1 billion valuation. We were like, all right, what's going on here? I think that's really was like the gripe with Peloton more than like me hating the business or anything like that. It was more like a valuation thing, and I was happy to see it go from 160 to like 10, you know. But like now that it went to 10, I don't really care about it anymore.
Okay, that's very valid. But I'd rather own $1 million worth of AMC than Peloton, to be honest with you. Another one I got for you is Carvana. Carvana, I thought Sal was going to say that one too.
Did you look at Carvana this morning?
I can't even say anything about it. They're on the move. Is it
Really?
squeezing or dumping off of that news yesterday?
Hold on.
No way.
Yeah, Carvana's up 35%, buddy.
No way.
Yeah.
Dude,
Oh my
it's
God,
up
I'm
like
looking at that.
1,500% off a load.
Yeah. Fucking squeeze them.
This thing was at $4.
Whatever. I'll still hammer more shorts. Yeah, I could go on for a little while. I hate Clover. I hate Marathon and Riot now. I could keep going on this one for a bit, but that'll wrap it up for today's Bet the Bell. I'm gonna pass it back to Hondo here.
All right, guys. That's going to do it for this morning's show. Appreciate you guys tuning in. It's 9:05 now. Time to wrap up. Good luck trading today, everybody. We'll be trading live in the King Capital Discord. You can go to king-capital.com or scan the QR that's currently on the screen to trade with us. We got that 7-day free trial going. We will see you guys back here on Friday morning at 8:30 a.m. Eastern Time. Good luck trading, everybody, and have a great rest of your day.